Good morning, everyone, and happy Saturday. Welcome to Taxes for Authors. I'm Stacy Jones. I'm one of the lead ambassadors with PseudoWrite, and today we have Rus Garofalo. Did I get that right?
Perfect.
Okay, with Brass Taxes. Russ,
Yeah, I thank you for having me. We we love helping writers. We Brass Taxes works primarily with freelancers and artists, but also people who aren't that, but that's kind of what we were initially designed for. Um, I was a writer and performer when I started Brass Taxes. Um, I was also making my money as a video editor, and then I was trying to make my writing and performing my main thing. And then when the economy slowed in 2008, I happened to get a job working for a tax advisor in Brooklyn. And within 3 weeks, I realized that I was doing my own taxes badly. And I assumed and then was correct that so were all my friends. Um, and that kind of made that moment was like a combination of I was angry and then I was also curious. I was angry because I was living on like 20,000-ish dollars in New York City, which is a daily act of will. And I just realized I was missing out on money I could have been having the last couple of years had I known how to do my taxes more correctly to my
yeah,
benefit.
that much in New York is rough. That's tough.
Yeah, it was definitely like an act of will. I never lived anywhere for more than 3 years because you'd get priced out. It's just like, but you're there to like whatever, like, do the thing you always wanted to do. So, but it's a daily effort to make that work. And it was 2008, so a little better, but it still I was making less than most of the people I knew. Um, and and then I was also so I was kind of angry that I was like, oh, I could have been had another like 500 to a couple $1,000 depending on the year. Um, and when I understood that, I was also curious. I was like, why didn't anybody come and explain this to me? Like, why didn't even anybody come and sell me on this idea? Like, you should pay us more to make your taxes more complicated because it'll save you more money, including what it costs us. and and I was also I don't know if I would have believed them. Um, and my basic take was that people who got tax help were either rich, lazy, or scared of numbers. And I wasn't any of those. I had taught myself to use video editing software, so I felt like I could do my own taxes. Um, Not until I worked for a tax guy did I realize what I didn't know. And yeah, I just quickly realized that nobody teaches us this stuff. Like you just start making or trying to make untaxed money, but there's not reliable resources that seem trustworthy and seem like they understand the life and trials and tribulations of artists and freelancers. Um, and so, yeah, in 2008, I started Brass Taxes. I kept working for my mentor for 4 years. And then, yeah, we started Brass Taxes. Now we're 25 employees. We're fully remote. We do taxes. I think we did taxes in 48 states last year. Um, I know a couple people asked about Canadian taxes. This will be primarily focused on US taxes, but most of the crux of this would be transferable as far as how the systems work. It'll just, all the numbers will be US related. But brass taxes in particular does taxes for US residents, uh, non-residents, but we're focused on US taxes. We don't actually complete uh, taxes for Canada or other countries. But if you work in other countries and have a US tax return you need to file, that would be back to us. Um, cool. So I created this tax talk. Um, I I created this largely for what people need to know to worry the right amount about taxes. The goal of this is by the end of the hour, you know what you need to be in charge of and what you don't need to be in charge of. When it makes sense to get help and when it's not really necessary, unless you have one of these ancillary questions I'll go over. And yeah, this is just the kind of, this is the stuff you're not taught. You just like get a check without taxes taken out and suddenly your taxes are more complicated. Um, if I ask Stacy to redo some copy on my website and say I'll pay you $1,000 and give her a check for $1,000, poof, like Stacy's self-employed. Like you don't have to do anything, set anything up. There's nothing magical that has to happen. There's no like uh, education or understanding of how your taxes have just changed. So that's the goal of this tax talk. And I'll be real clear about what is background information and education that makes this stuff less anxiety provoking year round, and what is the specific stuff that you need to do this um, just in order to take care of future you who's going to have to deal with this. So there's only two things that are really essential in this tax talk, and I'll hit on those. And then I also sent a PDF with takeaway information, so you don't have to take notes during this. And I also included a couple expense trackers that we created to help with this stuff, but we'll get more into that.
That's amazing. Thank you.
Yeah. Yeah, I mean, I think everybody at Brass Taxes, myself included, comes from a freelance writer artist background. So
Mhm.
there's much more of a like uh desire to communicate for me it's very much I wish I had known this, but it's also like, hey, this stuff it's not that confusing, but you do need to understand these parts. And once you're doing that, you're fine. You can stop thinking about this stuff. So a big goal of what we do with this tax talk and at Brass Taxes is help people understand the right amount to worry. I think people try and understand all money things, and then that gets overwhelming, and then we just put our head in the sand. And then suddenly we're like, oh crap, I haven't been thinking about like I'm gonna know a bunch of tax, and then we freak out again, and then we can't stay at that level, so we stop thinking about it again. And so, yeah, ultimately, I think we want to know that we're taking care of our future selves, but spend as little time as possible thinking about this stuff. Um, I'll say that most people don't understand these things, but nobody talks about it very much. So everybody thinks everyone else understands it. Um, there's a lot of like shame and like feeling like I should know this. Like, but I'd really encourage everybody to start from a place of like, this is not a personal failing. This is a societal failing. Everybody's starting from wherever they are based on their parents or their experience or where they are in their career or mistakes they've already made, so they know not to make those same mistakes. But um, yeah, largely this is just the way the culture has shifted into using contractors, freelancers. We'll use all those synonymously, but there was no education or understanding that's come along with it. And because most of the population is not in this category, it's difficult to get uh, good information just by using something like Google, which just aggregates the majority, which self-employed and freelancers are not. So we'll go over some basic stuff that I think most people get wrong and how they get it wrong. But yeah, feel free. I see some questions are coming up in the chat. We'll probably cover most of these in the process, but we can circle back to those. But I won't be able to review it while I'm talking, but we'll get back to it. Um, cool. So this was the first thing I didn't understand before I started working for Harvey, that there's different rules for you as a person versus you as a business. So as a person, I was a video editor. As a business, I was a writer and performer. I didn't know I was a business yet. I was trying to be a business. Um, but this is the first separation that I didn't understand, and that there's different rules for you as a person versus you as a business. So just to add some detail there, you as a person is your W-2 work, your retirement accounts, your student loan interest, where you take the standard deduction or itemize, that's an amount of money you don't have to pay income tax on. That's all you as a person stuff. You as a business, that's where you may or may not get a 1099 miscellaneous or 1099 NEC. If I paid Stacy $1,000 for doing copy on my website, even if I don't send her a 1099, she's still required to report that income. It's not just if you get a 1099, you have to report it, but that's where you as a business is where you're making or trying to make, that's a key part, trying to make untaxed money. So if you're a barista at Starbucks, that's you as an employee. If you're sitting at Starbucks trying to write a novel, that's you as a business. And again, the synonyms freelancer, contractor, gig economy, Airbnb is this, whatever, self-employed, all of these, all this verbiage depend on who's trying to coerce you. That's all you as a business. And that's where business expenses are. So a misunderstanding of these two parallel worlds is I didn't track my business expenses because it was lower than the standard deduction, the amount I don't have to pay income tax on. Those exist in separate worlds. So even if you're taking the standard amount you don't have to pay income tax on, we still want to track business expenses because those are in business world. Standard deduction, the amount you don't have to pay income tax on by default, that's personal world. So just understanding that as a separation. And that was the first thing I didn't understand. I was not dealing with my writing and performing on my taxes. My take on taxes at that point, being whatever, 28 years old, 29, was when you make money, you have to give the government a cut, which is that's a reasonable definition of taxes. What I didn't understand was what are the rules of when you're a business versus when you're doing something as a hobby. And what I realized was it doesn't matter what the results are. It depends on how you're conducting yourself. How are you living your life? How are you engaging with writing? And the reality was that I was engaging with writing and performing in an effort to make a profit. The results were currently, I may have made some money, but I wasn't making a profit. But the results don't determine if I'm a business or not. The way I conduct myself and my business is what determines if I'm a business or not. That was pretty heartening to hear that the IRS considered me a business because I was doing all the things that people do to try and make a profit. I was submitting stuff with the WGA. I was taking classes on sketch writing, improv, putting on shows, getting rehearsal space, having coaches, doing flyering, going to improv festivals. I was doing all those things. I just wasn't making a profit. That does not determine whether you're a business or not. Um, I think if you move creative pursuits into brick and mortar world, it becomes very clear. Like if I open a pizzeria, I have to buy or rent a place, get tables, ovens, plates, marketing, signage, employees, all the things. Very good chance I'm not turning a profit the first year or multiple years. No one would say I'm not a pizzeria. So you don't become a writer when you sell a book. You sell a book because of all the free crap you did, because of all the pro bono work, all the toil you went through. That's why you sell a book. And when you do, you're going to pay tax on that. But you didn't just become a writer. That happened because of all these other years, because of all that other effort. And we'll get more into the details of how we can assess that and some of the, I think things people get stuck on, but yeah. I think a good test is if you do this activity when it's annoying, you're probably a business. It's Saturday, it's nice out here, you're at this talk. There's probably something you'd rather be doing. Like this lends credence to the idea that you're doing this as a business. You're pursuing a profit. Yeah. So this is the first thing that of the two important things as far as being a freelancer, self-employed contractor, gig economy person, making or trying to make untaxed money. And this is why it's important to track business expenses, because it doesn't matter how much you get paid. It matters what's left over after expenses. So if I decide to make a film and I get paid $100,000 to make that film, but I spend $90,000 in business expenses, I'm only taxed on the $10,000 that's left over. So, some people come in, they're like, I'm going to owe a ton of taxes. I got paid $300,000. That's kind of irrelevant until we figure this out. It's like, it doesn't matter how much you're paid. You could have a loss. You could have spent $350,000. Like, it's not based on what comes in. Most taxes are based on what's left over. So this is why business expenses are important, not because you need to just be studious like this pretentious cat. Well, he's a scientist, but all right, I'm prejudging. Apologies. But it's not just that we're tracking business expenses because it's the right thing to do or we're trying to be A+ students or whatever. It's because of this. It's like it lowers what we have to pay tax on. And that's the upside to all the challenging parts of being a freelancer, is you get to write off your business expenses. And if you're doing something you enjoy, then it's very likely that a lot of those business expenses are things that you enjoy. So we'll get more into detail of how do we do this? What does this mean, et cetera. But this is why it matters. It's only the profit that's taxed. So the first of two things you need to be in charge of is tracking your business expenses. This is where the whole game turns from black and white to the whole continuum of shades of gray. This is when you've entered the gray area. This is why and when I'm very confident it makes sense to get tax help. When you're making or trying to make untaxed income, this is what the IRS says you're allowed to deduct: ordinary and necessary business expenses. It sounds kind of specific, but is extremely vague. It depends on your industry. It depends on what you did that year. It depends on what business decisions you decided to make. And that's where a more objective person who plays this game a lot becomes very valuable. You're going to do your taxes once a year. In 1 year, each person at Brass Taxes will do 6 lifetimes of tax returns. Like, this stuff isn't rocket science, but it's just that you don't play this game very often and the rules are changing and your situation is changing. So interpreting that line, and you're not able to follow a decision tree of there's too many variables, and that's why this is that vague, because it needs to capture everything. So like if I wrote a book, I'm on a book tour, I decided to do a 50-city book tour. I'm self-funding it, and at the end of the book tour, at the end of each time I'm at a reading or a bookstore, I decide it's pertinent to the story that I wrote, and I just start throwing M&Ms at the audience and deriding them or something. Suddenly, M&Ms are an ordinary business expense. They're part of my marketing or my performance when I'm doing book readings. That's my judgment call as a business owner. I can write that off. I would write that off. but it's weird. Like you can't Google are M&Ms a business expense for a writer because I mean I don't know what'll happen. That will not work. You will not get good information. But this is the crux of it. You're now in the gray area. You're out of a lot of taxes are just like you get a W-2, you type it into the tax software, done. There's no interpretation. It's just this is how this is taxed. Same thing with student loan interest, with your mortgage, with stuff like that. But this is where it gets complicated. This is what I didn't know about. This is what I was not dealing with on my tax return. I was keeping my taxes simpler and paying TurboTax less to file them, but this was costing me way more money than it would have cost to uh, pay someone to help me with them, as long as their prices weren't crazy. But I didn't understand why. I didn't know that this was a thing, and I didn't know why it would benefit me, which I'll likewise show you later. But the key part of like the role you need to play in this game is tracking business expenses. And when I say tracking, I mean at least monthly. You have to get them into the tax categories. And the reason we want at least monthly is because we don't want to end up with a pile of receipts, either digital or physical, at the end of the year. You won't do it. I've 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 tried to be that person. You don't do it. We'll talk about different ways of tracking stuff. These are some categories. These are not all of them. I'll send um, the folks at Pseudo write all the categories that we use for taxes. I'd really recommend using our categories rather than creating your own system because ours are more focused on the tax categories. Yeah, but this is you're now diving into the gray miasma of tax expenses. Um, Honestly, there's no perfect way to track your expenses. I would say any system that you'll use at least monthly to get it into the right category. I also have examples on that PDF. And a good test of whether your system you're using is good enough is will you track a $3 receipt? So if you go and buy like, masking tape for something you're working on, whatever. So you can do like the margins of your book or something, or decide, in that moment, will you decide it doesn't matter, it's just $3, or will you get it into the category of supplies in this case for your expense tracking system? When I was initially freelancing, I was like, oh, I need to track expenses. I understand. This is important. And I tried to I created an Excel doc and I was like, I'm going to be an Excel person now and get my life together. And I'll be really I'll stay on the straight and narrow and I'll just do this and everything will kind of fall in place with like being an organized human. And I did it for like a week and a half. And then I came home with like masking tape or something. And I was like, it doesn't matter. Like, present Russ doesn't care. He's like, in my head, I'm like, it's only $3. It's going to save me like 75 cents or something on my taxes. I'm not going to turn on my laptop, open Excel, find the right file, type it in, make sure I save it, say what it was, when I got it, how much, I was like, I don't care. And what I realized was that what it meant was that system was too cumbersome for me. There was too much friction. What I ended up using is this, I just made it up, was an envelope system, which is in the PDF. Just took an envelope, binder clipped them together. On each envelope, I wrote a tax category and I hung it on a hook in my living room. Whenever I bought something that I thought might be business related, I would stick that $3 receipt in my wallet. Within a couple weeks, your wallet's getting awkwardly full. You want to empty it. And I hung it in my living room, like similar to like when you have garbage and recycling, like make it as easy as possible for the way you think to get those things into those categories at least monthly. So I would just stick that $3 receipt in the supplies envelope. And then at the end of the year, all I have to do is add up what's in there. I don't have to think, what is this? What is that? Oh, this is $4 at a coffee shop. I wrote down Mary. I don't, I guess that's meals, I guess. Like it's that process is what wears us out. Just adding up numbers, our brains are fine with. Um, but also there's no perfect system. Find something that works for your personality. Don't be under the assumption that there's the best tracking system. If you want to try an app or a tech thing, go for it. If you want to try something very like um, tangible, like try it. If you'll save a $3 receipt and stick with it at least monthly, just keep using it. We'll get into the differences of tracking receipts for your taxes versus tracking them for an audit, and go over that briefly, but mostly we're tracking these just for your taxes. Audits are very rare. And an audit is just a scary word for show me how you got these numbers. Cool. So this is how it would have benefited me. Oh, no. This part is about the different kinds of taxes that people pay in these parallel universes. So you as a person and you as a business pay similar taxes, but not quite the same. So both of you pay income tax. You as a person, you pay half of your Social Security and Medicare, and your employer pays half of your Social Security and Medicare. When you're self-employed, you're the employer and the employee. So you pay both sides of Social Security and Medicare. So self-employment tax is what they call that. It's just the employer and employee side of Social Security and Medicare. It's about 15%. So when you're an employee, you pay 7.5% of that out of your paychecks, and your employer pays 7.5% out of your paychecks. But so similar, a little bit different, but also the timing of them is a big deal. If you're getting paychecks from Starbucks, they take this money out of your paycheck before you get your check. If I pay Stacy $1,000, she's still responsible for whatever profit is left over and paying tax on that. But she's responsible also for saving the money for taxes. So that will get to our other big thing. This is a little bit more background to understand the levers and pulleys of how these changes affect things. And this is usually the one that throws people off. Either their first year of freelancing and making a profit, or they had very small profits and suddenly they have a profit of $60,000. Self-employment tax is a flat tax, meaning pretty much from the very beginning of profit, after you subtract expenses, you owe the IRS 15% of your profit, all the way up to like $130,000. So this is how your taxes get big fast. And so we'll go over self-employment tax, and then we'll go over income tax. This is the bigger surprise when people aren't prepared for it. When I was working for Harvey and making $20-ish thousand, I was doing one of his clients' taxes, and this guy was a writer, he was an artist, and he made $30,000 of profit as a self-employed writer, as a freelancer. And immediately my brain was like, oh my God, that would be amazing. Like I would stop chasing video editing jobs for 15 bucks an hour. I would just be writing and performing, and I'd be making more money than I'm even making now. And I would have an appetizer when I went out and a second drink, and that would be amazing. And so I'm like, this whole movie is playing in my head of like, okay, maybe this is 5 years from now, 2 years from now, who knows? And then I was going to find his results because I had to call him and tell him, what he owed for taxes. So he made a profit of $30,000. He owed almost $8,000 in taxes. And immediately the movie in my head popped. It broke. Because in my fantasy world of what my life would be like if I had $30,000 of profit from writing and performing, I had, even in the fantasy version had no, I did not have $8,000 ready to write a check that wouldn't majorly disturb my life. And that's when I realized there's no way you're prepared for the size of these numbers unless you know they're coming. So this is a little background, but ultimately we're headed towards the second important thing you need to know is know roughly how much you're going to owe and have that money. So for example, if you have $30,000 of profit, you owe about $4,500 in self-employment tax. The rest is federal income tax, New York City and state income tax, because we're in New York City. But the majority of that is that 15%. So, and if you were to Google, I made $30,000, how much am I going to owe in taxes? Google's going to assume you're an employee, and it's going to tell you about income tax. It's not going to assume you're self-employed unless you said, I'm self-employed. How much am I like, and then I don't know if it'll get it right or not. But that's part of the challenge of not knowing what we don't know. Even if you're trying to be ahead of this stuff, it can be difficult to find good information. And that brings us to income tax, which is the other kind of tax. This is usually the one that's in the news. So people generally say taxes, lower taxes. They're usually talking about this. This is a progressive tax. This is the tax brackets stuff. The more you earn, the more you pay, but most people don't understand how this works. So I'll explain it quickly. A misunderstanding we get is someone will call us who's a client and they say, hey, I just got a raise to $50,000. Should I turn it down because it's going to put me in a higher tax bracket? And I'm going to end up earning less money than I was when I earned $45,000 and was in a lower tax bracket. And that's a misunderstanding of how this system works. So this is how that system works. You always go fill the buckets from the left to the right. The first bucket is the standard deduction or the 0% bucket. This is the amount of income you don't have to pay taxes on. In the US this year, it's $14,600. So if you made $10,000 as a profit, remember after expenses, a profit of $10,000, you don't owe any income tax because all your money is in the 0% income tax bucket. But you owe about $1,500 in self-employment tax. So once you fill that bucket with $14,600, your next $11,600 are taxed at 10%. So not all of your cats go in the 10%, just the ones over 14,600. And then after that 11,600 in that bucket, then the next 30-ish thousand, 35,000 goes in 12% bucket. And then once you cross that threshold, $47,151 goes in the 22% bucket, and so on and so forth. So always take your raise if you get offered it. It's always a good deal. You're always making more money. But yeah, so it's the combo of these two: income tax, self-employment tax. Now, this is how it would have played out for me to save money when I was losing money as a business. So this is where I was when I started working for Harvey and doing taxes. I was making my money as a video editor, or barista in this case, and I definitely wasn't making $5,000 yet. But this is what happens. I have these parallel worlds. Russ as a person is making $30,000 and having taxes taken out. Russ as a business is making some money, but spending more money, so currently running a loss. So what happens is at the end of the tax return, these funnel together. And I'm saying, take both of these parallel worlds into account. I should only owe income tax on $27,000 of income. So that's how I was losing money each year. And I guess I bring this up to illustrate that as something I didn't know. It's not that every year you're going to have a loss and it's going to benefit you, but it's to indicate that I was already a business. I just didn't consider myself a business because I was ending in the negative. But it could have been benefiting me, and I was a legitimate business. I just didn't feel like a legitimate business because I wasn't comfortable like telling someone at a party I was a like writing and performing, because I felt like their next question would be unanswerable of like, what have I been in? What have I done? And I was like, I sent in a lot of stuff. I was frustrated a lot. So I would say I was a video editor, I'm a waiter, I'm whatever. But yeah, I wasn't dealing with this fact, and that's why this is how it was costing me money when I wasn't making a profit. And that brings us to the second important thing is when you have a profit, or if you think you're going to have a profit, you have to prepare for that. The amounts of money get large quickly, and you won't just have this money sitting around. Some people choose to pay estimated taxes, estimates, and send them to the IRS or their state. We have a lot of clients who do that. We have a lot of clients who don't. A much bigger deal is, do you have this money somewhere? It's a much bigger deal than, paying a little bit of interest because you didn't send it to them during the year. I wouldn't get caught up in that idea. These are a couple ways, rules of thumb, as far as figuring out how much you'll owe in taxes. Once we work with a client, we can dial it in much more exactly based on what you're actually spending, but these are rules of thumb. You can take 30% of your profit, or you can take 25% of everything you're paid. You might end up saving too much. You might end up a little short, but you'll stay in the ballpark. We're trying to just stay in the ballpark of the amount of money we'll owe, so it won't mess up our lives. If, at the end of a tax session, I was like, oh, you have 6,000, you actually are going to owe around 8. We have 2 months, or we could get on a payment plan, but $2,000 probably not going to mess up your life too much. If you think you're going to owe 2,000 and we tell you you owe 8, it's probably going to significantly change your behavior, your activities, like whether you're going out to dinner that night. So that's what we're avoiding. We don't want to get caught up trying to be perfect because there's a lot of vagity here. There's a lot with the business expenses. There's a lot with different tax rules. Are we going to take a home office? What else is happening at your barista job or your W-2 job? Do you have a spouse and they're throwing money on the pile? This is to assess your what to do with your untaxed money and potential profit. Cool, almost done, and then we'll hop into some questions. I might just have you people read them out loud, or maybe Stacy, if you can pick out some good ones. I don't know that we'll get to all of them, but I'll tell you what to do in that case as well. So takeaways as far as content, cat's still soothing. You as a person versus you as a business is an important distinction. Business expenses are important because they lower your profit. You only pay tax on your profit. And 4, you need to know about income tax and self-employment tax and know roughly how much you're going to owe, if you're going to owe, and have that money somewhere. And I'll add, take that money out of your regular bank account. If you're not going to pay estimated taxes, that's fine, but stick it in a high yield savings account. You don't want to see that money when you look at your bank account because it's not your money. You're holding it for the government. You need to emotionally disassociate from that money. And then, sorry, 1 second. This is when you should get tax help. Not everyone needs to get tax help unless if you're rich, lazy, or scared of numbers. I think that's totally valid as well. I was probably being really judgy or just didn't have the money to do it. But I think the time it makes sense and a tax person will save you more than they cost or stop you from doing something you might not want to deal with later is when you're making or trying to make untaxed income. You've entered that gray area. I think it makes sense to have someone who's not emotionally tied to the money being discussed giving you advice. Oh, hang on a second. Other times that it could make sense is you want to understand what's happening and change it or figure out what's going on. Every year we have W-2 employee couples or people who just come and have been owing for the last 5 years and they don't know why and no one will help them understand. It's very hard to get stuff like that solved. Likewise, if you're about to get married, if you're about to have a kid, if you're changing states, your taxes get complicated, at least for that year, if you're working in multiple states. things can get confusing. Um, and then regardless whether you work for us, um, work with us, the person you're talking to needs to understand your industry. It doesn't matter if they're a CPA or an enrolled agent. That's what I am. It's an IRS thing. It doesn't matter what letters they have after their name. It doesn't mean they're going to be good at doing your taxes. Like if you needed an attorney because you're on trial for murder, a real estate attorney is an attorney and they're official. It says Esquire. They're not going to be good for what you need. So you have to find someone who understands your industry because of that gray area. And the second thing, they have to talk to you. A lot of tax places really avoid talking to you because it allows the tax place to do more taxes. But because of that gray area, you have to have a conversation because you have to explain, I spent $4,000 at M&Ms with M&Ms throwing them at people. You have to mention that. They'll be like, what? You have to explain. And if they understand your industry, you're like, all right. I mean, sounds like you were doing a reading and that was part of your performance and made sense to you, maybe to them. We'll see how the book sales turn out. And you also have to be comfortable talking to them. It's easy given the situation for like, it's very vulnerable. You're showing all your private stuff. You may show no one else. The person, you need to be comfortable with them. I define comfort as you'll ask them the same question 4 times. You're like, Russ, I know you just explained self-employment tax. I still don't get it. You should be able to do that 4 times. And they should be like, okay, let me try again. Let's figure this out. This stuff is not rocket science. It's a video game that we play a lot and you play once a year. There's nothing crazy complex about it. I don't think understanding all of it makes sense to you. If you're in these categories, I don't recommend you doing your own taxes. I think you'll get a better result working with someone as long as they meet these criteria and they don't have crazy prices. Our prices are on our website. It can be difficult to find out what places charge, but if you have someone and you're working with them and they meet these criteria at the bottom, cool, stick with them. Like it's fine. If you're curious, like, yeah, I mean, ask them questions. You should be able to explain this stuff. It's not that hard. You should understand what's going on your tax return because it's your tax return. Cool. That is the bulk of it. We have a really good FAQ on the website that's created for freelancers and artists. And then if you have some questions that we don't get to or are not there, you can reach out to info@brasstaxes.com. And if anybody's interested in becoming a new client, you can use this referral code for $50 off. These are a couple of things that come up a lot. I'll just go over them quickly. One of the tests for the IRS to decide if you're a business or a hobby is, I think there's 11 tests or 13. One of them is, did you make a profit in 3 of the last 5 years? I would recommend that you ignore this test. Lots and lots of artists have been deemed a business even though they didn't meet this test. It doesn't mean you have to pass all 11 tests to be a business. It depends much more on how you're conducting yourself. I think we fixate on it because it's very black and white, and it's also very soul crushing. Because whether it's the first 5 years or some 5 years, there's likely to be a period that you're not going to make a profit that would not meet this test. You don't suddenly not become a writer. Grants are almost always taxable. So are honorariums, stipends. The default is taxable. Should I incorporate? Most people should not, unless you're making significant profits, over 100,000 in profit. And that's literally become a corporation. An LLC could be a liability help, but what are the odds you're going to get sued? We speak on this in our FAQ. A big part of what's challenging about this stuff is the inconsistent income, and it's just going to be part of the thing. It's just something you can still do planning, but you have to do different planning than normal people because you could make $150,000 and the next year you make $15,000. Your life didn't go off the rails. It's just that's just how income goes in this industry sometimes. So things like saving for retirement is you can plan for it. It just might be the amounts year to year might be fluctuating, but the activity can stay consistent, and that consistency is important. And then circling back to all this stuff makes me feel stupid. I'm terrible at this. This is not stuff we're taught or learn. Generally working with clients, sometimes they pick all this stuff up in the first year of doing it, but often it takes 2 or 3 years. And it takes that long because you only did it 2 or 3 times. This stuff doesn't stick because we only deal with it once a year. So just don't be too hard on yourself. And I think of taxes now, if you're in this gray area, it's just a reasonable thing to delegate. I felt like it felt like a thing that suckers did or something, or lazy people or rich or whatever. And I was like, it's just like a bunch of other stuff I delegate. I could watch YouTube videos and learn how to like whatever, like change like my oil pan on my car or like my something, but it just doesn't make sense. I could learn how to file stuff for lawyer stuff. It's just not worth my time. It's not what if it's not what you enjoy doing, I think it makes sense to delegate it out and just pay someone else to know the things, explain it to you as long as they meet those criteria of explaining and knowing your industry, and just move on with your life and go back to thinking about things you enjoy. Um, and yeah, the two important things, you're taxed on your profit, so business expenses are important. You'll owe about 30% of your profit in taxes. You need to have that amount. Cool. Um, cool. Let's take a gander at some questions.
If you're ready for them, I can start
Sure.
giving them to you.
Yeah, shoot, Stacey.
Okay. First off, isn't there a significant penalty for failing to pay estimated taxes quarterly or for paying too little each quarter, assuming you have income each quarter?
Comparatively to your taxes owed, no. It's a bit of a complicated equation, but you could owe $10,000 in taxes and have an estimated tax penalty. Instead of penalty, call it interest, and it becomes less judgy and threatening. You can have interest on your estimated, having not made your estimated taxes, of $100 to $300. So you owe 10,000, and this is going to add somewhere between nothing and a couple $100. So if you, I just have clients who think of it as like, I do this sometimes myself. I'm like, I don't have the time or brain space to think about this right now. I'm just going to take it as like a convenience fee. I'm just going to owe them, maybe I'll owe them another $75, $150 at the end of the year. You're not in trouble. It's just you're making a decision to do it. It's much more important to have that money available.
Okay. Second question. I paid my 12-year-old son to proofread my books last year. Can I issue him a 1099? It totals about $9,000.
I won't get into specifics on this issue. The question becomes, was it a legitimate business expense? There's a lot of Instagram and TikTok information out there of paying your children so you can write them, get them set up for retirement. I would deal with it on a case-by-case basis. Same with any visa stuff, and incorporating. I would want to know more about the specific situation. And if you 1099 them, your kid, they're going to owe self-employment tax. But yeah.
Okay. If you already have a business part-time that's adjacent to, but not exactly writing and publishing, do you need to have a second Schedule C, or do you split expenses across both by percentage?
I would just judge on a case-by-case basis of like, is there an umbrella that could contain both? Yeah, math-wise, it's not going to make a difference if they're
Okay.
on.
And would you say registering in both countries, I assume this is someone in either Canada or Germany, is the best move? I'm asking as many of us are basically forced to do so to publish with some of those platforms for publishers.
Um, I'm not sure what the tax implications might be if by the registration stuff. Some of this is like legally, do you have to for the rules of Germany, Canada, etc. Um, the United States taxes, if you're a resident, taxes you, resident, citizen, green card holder, etc., taxes you on your worldwide income. So if you have to register in Germany and end up paying Germany taxes, we can get you a tax credit for those taxes paid to Germany. Um, and generally, Europe, most Canada, Western Europe has higher taxes than US. So yeah, uh, if that's what you need to do, it like anything, it adds some complexity to your taxes, but um, we, it's yeah, I generally feel like it's less brain stress to do whatever is legally required as opposed to be like, maybe Germany won't notice if I work here for a couple years and just that kind of stuff. I think kind of there is a mental toll that I think holding that exists in, and you'll get a tax credit for taxes paid from the US.
Okay, and that plays into the second question. Oh, and we have a raised hand from Miss Estelman. Go ahead, Esty.
Yeah, I'm the one from Germany, and I'm sitting in Germany, and that was the question if I want to sell over Amazon America, US, whatever, um, they reduce the taxes automatically. So how can I get this document to Germany? Because I read there is a double taxation agreement. And we have the highest taxes in the world in Germany, and I'm love to pay in America too.
So so they're forcing you to pay tax on your US income, but you want to get a credit in Germany? Is that what I'm hearing?
I have to report worldwide income in Germany. Yes.
Yeah. Um,
But
yeah, so
KDP withholds for the US automatically for her.
yeah.
And
Yeah.
how does she stop that or get some kind of thing over there without going through all the trouble of filing tax?
Yeah, I believe you'd have to file taxes and show that you can file as a non-resident. And when we have the reverse situation, we often have to attach the German tax return to our US tax return to be like, see, they did this. Um, so the US is going to want their taxes based on your source income that is related to the US. And then you would take that and assuming German rules are similar with the treaty, that they will give you a credit for those US taxes paid.
All right. Just wanted to make sure.
Yeah, it's annoying, but
Yeah,
that's really
it's
what.
always annoying.
Yeah.
Thanks.
And I feel like that did answer another question. For the sake of the recording, I'll go ahead and say it aloud. It says, I'm in the UK and see that tax is withheld from my sales. How do I get it back or get it not taken out in the first place? I feel like we pretty well answered that.
There are some links from KDP, and you have to check out what your treaties are, and you have to fulfill whatever KDP wants you to fill out in terms of a Schedule 8 form or something, so that it doesn't either they can say, okay, we won't withhold anything anymore because you've filed all the information, or with the treaty, it turns out they do need to withhold and you do have to file taxes. So essentially, you got to go somewhere else and find out the answers. You got to read your treaties and you got to read your KDP info.
Okay, next, how much time do we have? We've got 3 questions left.
Yeah, let's go for it. I'm fine.
Okay. So, do we need separate bank accounts if we are a sole proprietor slash DBA for making expenses, putting the savings for taxes?
The answer is no, but I would say do it. One of the easiest ways to deal with business expenses is have a separate account and have a separate card. So it doesn't have to be a special business card or business account. It could just be like when I'm going to buy that masking tape, if it's related to my business, I'm going to use the Wells Fargo card, or I'm going to use like this like this Visa. And that is only going to be used for business stuff. When I get paid, that money is going in the Wells Fargo account. When I go to buy groceries or go to like just have dinner with a friend and hang out, that happens from my Chase account or from my from my MasterCard. And suddenly you've now separated those two worlds, the personal world and the business world. And so when you have to go hunting for receipts, because like I haven't looked at my expenses all year, at least you're going to less places. And you can assume like, hey, some previous version of me decided this was a business thing. What was that? And then you can look at your calendar, you can figure out maybe what you were doing, where you were going. It's just a great way to recognize that bifurcation in the moment of making a purchase. You want to make it as easy as possible to be like, oh, I just have to grab this card. And suddenly you're like, you're organizing it just by which card you're grabbing. And you're collectively aggregating for the year, all the business expenses are going in one place. Whereas if you just use one card, you're now left with a pile of digital virtual receipts, credit card statements. It's all business and personal, and now you're sifting through it. Yeah, so I think it's a great early move. And just this one's always business, this is always personal. If you do something by accident, you could even just move that money over and make a note to be like, oh, I accidentally used the wrong card. This was for the masking tape I bought, on this date.
Yeah, intentionally setting good habits for yourself.
Yeah, yeah, make good habits easy.
Yeah.
Don't assume like, yeah, like just make it as easy as possible. We ultimately don't want to spend that much time thinking and working on this stuff. But some of these things are so simple that it's like, it's like that's why the recycling is right next to the garbage. Because you're like, oh, right. It's just as easy. So to just do that good habit. Yeah, I think it's a great one.
Okay, this I think is a good question. If we haven't published yet, but intend to, can you still write off the fees for pseudo-write, ChatGPT, a new computer, etc.?
Yeah, so there's some nuance to how essentially you're in business once you're available to do work. So for a writer, that gets very ambiguous of like basically when you hang your shingle outside to be like, I'm a writer, I'm a lawyer, I'm a tax person, I'm ready for anybody to come hire me, you're a business. So the results, the publishing, the whatever, is not what indicates it. I would say like if you're out there looking for work, trying to get freelance gigs, writing stuff on your own, publishing it, like you putting it wherever you're putting it so people can see it or sharing it around, like the odds are you're in business already. You just haven't, it hasn't taken physical form, it hasn't sold, it hasn't published, but like I'm here and available and ready and looking for work. Like if nobody walks into my like tax place to get their taxes done, I'm still a tax preparer. I just need to do more marketing or get a better personality or something. But I'm still in the business. So I would say you're probably in the business of being a writer well before you publish.
Yeah, so intention matters.
Yes, very much so.
Okay. And for our last question, Um, how can we determine this was answered in chat, but for the sake of the recording, how can we determine if it'd be beneficial to declare our writing as an author business as opposed to operating as a freelancer?
I'm not sure I understand the question. They would. I've come around to see freelancer, gig economy, contractor as pseudonyms or marketing language.
Yeah, they're all under the blanket of you are a business.
You're a self-employed person. You're responsible for your own taxes. We don't have to pay you minimum wage. We don't have to pay half your Social Security and Medicare. You can't sue us for certain things. That has largely been the shift in the economy. I think, I definitely was in an era of just calling it freelancing. But freelancer can also be used as to mean I don't have job security. And you could have a W-2 job that only lasts 2 weeks. So you could feel like a freelancer or consider yourself a freelancer because you're like, I only have a job for 2 weeks. But generally, I use freelancer as making untaxed money. And it comes with a higher level of responsibility. But both of those things would end up on a Schedule C where self-employed work goes. Likewise, if you set up an LLC or a DBA, that's most likely where it would end up as well. So you could get paid just to your social security number, or you could get an employer identification number and give that out to gigs that want to pay you and have a 1099 sent to your employer identification number, your EIN. You could have a DBA to be like Super Rus writing, and maybe that lets me charge more because now you're paying Super Rus writing. And so that could be a business choice to be like, I think I can get paid more if I work under a doing business as name, a DBA name. But yeah, those would all end up on the Schedule C where self-employed income goes.
Good. And that was our last question.
So
I just had a question about the buckets, the picture with the buckets, because I just got mixed up because the standard isn't in the following buckets. So if you could just show us that and tell us how to read that image again.
yeah, sure. There we go. So the standard deduction, I had a different, I had a diagram I preferred where the first bucket, when it gets filled, spilled into the second bucket. And when the second bucket gets filled, the rest spills into the third bucket. So I think part of what is not conveyed in this is you fill from the left to the right. So the standard deduction is not inside the other buckets. I think maybe you're speaking to the math. So this 10% bucket would cover your first $26,200 of income.
Which is the 14,600 plus the 11,600?
Correct.
Okay.
So in this 10% bucket, you only have $11,600 of taxable income. So that's a separate line on your tax return.
Yeah.
So this would altogether would be, I think you're thinking of total income. So the total income I could have and still be inside the 10% tax bucket is 14,600 plus 11,600.
Okay. And then the next bucket, it's another 11,600?
Nope. It's from now we're in taxable income. So once your taxable income goes over the not taxed money and the 11,600 taxed money, the next $36,000 of taxable income is in the 12% bucket.
Okay, so that's what's confusing me is that I was seeing that 11,601. I was reading it as 11,600, and I don't know. I thought it was like the up to, but now I see what you're saying. Okay.
Cool. Yeah, good question. Most people cannot explain how this works, and it's largely, I don't think it's obviously not necessary to understand it, but I think understanding how these things work just lowers the anxiety and tension of this stuff, which we carry around all year. I was living on $20,000. You're always thinking about money. Money's always happening. It only comes to a crescendo when we do taxes because we're forced to reckon with all this stuff we do and don't understand. So yeah, that's why we go about explaining it. Because yeah, it's just this stuff it's stressful to not understand it if you want to understand it, and it's not that difficult. I think we could potentially rewrite this a second way, and that would help.
I guess I just want to see both sets of numbers, like the amount of number that's in each bucket and the total at the bottom, saying, okay, this is, if you're at this level, you've spilled into this bucket, but it's just that little bit you've spilled into that bucket,
right?
And the rest of it's still less taxed.
Yeah, I think it might be easier if we did total income instead of taxable income.
Yeah,
because we're not specifying. Yeah.
But when you talk about total income, you're not withholding anything. You're not taking expenses into account, which is what all of what we're talking about is about. It's about tracking our expenses.
Right. Well, this realm is this is after we figured out our profit.
Okay, so it's total profit, not total income.
Your total profit is factored into your total income.
Okay.
So total income is a line on your 1040 where we've already figured out your total profit.
Got it.
So we're not using it colloquially. We're using it as like that line on the tax return. Total income happens after we've already subtracted all our expenses.
That's confusing, but yes.
Yes. Yeah. Normal words suddenly have very precise definitions because, you've now gotten into like legal stuff and the IRS arguing with tax people and clients and stuff. So yeah, I think a lot of this stuff is difficult to wrap our brain around because the words are just regular words, but we mean very specific things.
Yeah, you hit it. That's legal versus colloquial. And we need to know when you're speaking, even though we're talking to you and you're the tax guy, so obviously you're speaking in line items. We're not hearing in line items always.
Right. Cool.
This is why I pay someone else to do my taxes.
Yeah, it took me a while to come around and not see it as like a failing when I wanted help with this. I think because it was on a computer, I was like, I can do it. I can do it myself. Like I'm tech savvy, as opposed to it's really the knowledge gap that's the problem. And it's the emotional reaction to the money that's challenging.
And I think you hit the nail on the head earlier in that doing it once a year for yourself, it's not that you're not capable, but you don't have the constant familiarity. You have to essentially relearn the whole process every year, or at least refresh yourself. Whereas going to someone who's a professional, not only are, the high chances they'll do just a better job, but they don't have to take that time away from writing, away from whatever your, self-employment business is to relearn.
Yeah. I described it as like once a year when I was a kid, my mom would come and try and play video games with us. And of course, every year she's terrible. It's because she played once a year. Like, I think the variables are so set up for you to not have a good experience and to not feel comfortable. I think that's a big part of it is even if you do it yourself at the end, right before you hit submit, after you've spent 2 to 10 hours, it's not going to tell you if you did a good job because it doesn't know. It's just like, okay, you can submit this. And at that moment, you're like, wait, this is a lot of money. Like I'm getting 2,000 back. Should I get more? Should I be owing? Like I made a lot of judgment calls. and you don't know what's worth pursuing. Like, is Googling this going to save me $20 or $2,000? Because that would determine how much I'll keep researching. But you don't know that. And then it's time for dinner and you're like, should I just come back and do this later or should I just hit submit? Like you're making large financial decisions based on like your blood sugar and your understanding of this stuff and what resources you stumbled into. And it's just a very, it's not an ideal scenario for moving around a lot of money. So yeah, I really am much more open to like seeking out professionals in areas that like I'm just good at this. I'm good at doing freelancer artist taxes. Like when it gets outside of that, or when it comes to like setting up legal stuff for my business, or like doing a will or a trust, or getting legal advice or HR employment law, like all that stuff, I'm like, great, let's have somebody else do it. Like, I don't want to go, it doesn't make sense for me to go learn it to do it once, because if I ever need it again, things will have changed or my situation will have changed. So I'm just learning all this and then never benefiting from it again. Yeah.
Well, Russ, I think this was an absolutely spectacular class.
Thank you.
Really, really beneficial.
Yeah.
Thank you so much for coming and for giving us your time and your expertise.
Thank you. Thank you for having it. Yeah, and if anybody needs anything, feel free to reach out.
Absolutely. And I believe we got a screenshot of that pseudo-right exclusive discount code. I hope everybody saved that. If not, I wrote it down. You can DM me if you need it. And if you're ready, I'm going to go ahead and stop the recording.
Yep. Thank you.
Thank you so much.